Hello, everyone. Welcome back to the Trading Room. I'm Shane Veneer, and this is the U.S. Mid-Session Brief. We're going to talk about a lot of things today. We're going to talk politics. We're going to talk FOMC, interest rate expectations. We're going to look at some key pairs. That breakout in the Euro-USD still sort of ongoing, but the market's really tightened up a little bit. We do have sort of a flat type of market conditions today. A lot of questions, a lot of uncertainty. You know, when you go into a trading week and you don't have those huge events, the CPIs, the NFPs, the Fed meetings, the FOMC minutes, when you don't have those things, you almost expect things to be dull. And aftermarket yesterday was anything but dull. I mean, we saw something we've never seen in the history of the United States. It was an unprecedented move by the Trump administration to actually move to fire an acting FOMC board member. But there's another resignation that nobody's talking about. And it's something that happened a few weeks back. And this is an interesting situation on the FOMC. We've never seen anything like it. So I'm going to go ahead and recap it. We're going to talk about what could potentially happen here. A lot of headlines out, a lot of scuttlebutt right now that say the markets are going to go absolutely haywire as the Trump administration applies pressure to the FOMC. I'm not so sure about that, but I tell you what, rate cuts are coming, and when they start coming, they're not going to stop coming. This is an interesting situation. I don't know if it's right or wrong. We're going to have to, I'll unpack some of my ideas, what I think about it. A lot of you probably already know it, but man alive, what an incredible news cycle. I never thought I would see it. That's for sure. So I want to welcome everybody back. Good to see you. Hurst Horns, good to see you. Jolie, how are you, bro? I'm doing pretty good. I'm hanging in there. Had an interesting morning thus far. I think we're going to have some great trades. I've already got two that I really like. And, oh, man, my compliments to the chef on that U.S. oil trade. I'm going to go ahead and go over that just a second, do a little trade recap action. But good to see everybody in the How to Trade community. Tuku, good to see you. Andrea Gorwal, good to see you. And everybody that doesn't have live chat access in the How to Trade community. I know we got quite a few folks that are watching right over there. Remember, if you want some live chat access, cruise on over to Switch Markets TV or Switch Markets on YouTube, and you can go ahead and just engage in the chat. You can also watch us on How to Trade YouTube or Forex Signals, whichever you prefer. I'd like to see you go on over to Switch Markets YouTube, get signed up there because we're dropping shorts there all the time. And we're going to launch a few other trade idea type videos that should be interesting. Today, we dropped our newsletter video, our picks of the week. So if you're interested in the picks of the week, head on over there and check it out. But definitely feel free, if you don't have live chat access in the How to Trade trading room, head on over to YouTube, get on the live chat. Tell me anything you want. Ask me anything you want. This is about questions. If you have questions, ask. I know a lot of this stuff's pretty complex, but I will be more than happy to take the time, answer the questions. If I don't know, that's one of the beauties of this live stream. I'm not going to pull a CNBC or a Fox News or a Bloomberg. I'm not going to sit there and try to make up a story for you. If I don't know, I'll tell you I don't know. That's just the way that it is. But I do know what's going on a little bit with the FOMC, and it's all about pressure, and it's all about politics. We're going into a fascinating economic cycle. Bobby Bob, good to see you, Bobby. Gordon Williams, hello, Gordon. I'm confident you're doing well down there in Texas, I believe. Football season coming up. What is it? It's Texas-Ohio State Saturday. That's a huge game. Absolutely huge game. It's going to be interesting, though. I think we're in a sort of one of those times where it's great to be alive. We're going into the fall. Love the fall. Let's see. Hurst Horns, do you have a Discord, Shane? No, I do not. Probably should get one going. Just haven't got around to it. Been pretty busy. Trading, doing these live streams, and also making some video content, working on strategy as well. So my days are pretty full. But Discord, I'll take a look at it. I've been asked to do it in the past. I just haven't got around to doing it. I'm on X, though, Shane V_trader. If you want to follow me on X, you can get sort of my ideas. Usually I post our trade idea up there and maybe some commentary if there's some breaking news, but I don't really get on there too much anymore. X, I don't know if you guys have been on X. It's a dark place. I like to stay off of it. I like to keep my spirits up. All right, enough talk. Let's get out to price action. Euro USD daily chart. This is absolutely huge. Absolutely huge. Our trend line broke, right? We had this trend line on the daily, and I know this is simple, guys. If you're a first-time watcher and you're looking for advanced technical analytics, believe me, we will get advanced. But sometimes simple's better. It really is. I mean, that's one of the things I love about trading. It can be as simple or as difficult as you make it. This is pretty simple. This is just a basic trend line right there from that spike low, sort of connecting this area right here, this second touch. You could say that this is the second touch, but you could also say that this is just sort of one area and then a rebound. I like to see a retracement before we get that second touch. I would classify that as our second touch, and then that as our third touch. There was your bar close beneath your trend line. That's a trend line reversal, daily trend line reversal. So we're watching that relatively closely. What we had was a really beautiful trade going. It was absolutely really beautiful. And then Jay Powell came out, sort of had his little conniption fit there at Jackson Hole, and decided to scare the world by making news, making headlines. I still say Jay likes his attention. He likes to be in the forefront of the conversation when it comes to finance. But that right there was a Jackson Hole symposium. Yesterday was just a complete retracement of this pair. And now what's happening? The market is tightening up. Why is it tightening up? You guys know this. Why is the market tight today? You're saying, Shane, there's all these huge market drivers. Why didn't we get a big trend out of it? Because nobody knows what to make of this just yet. Nobody knows what to make of Lisa Cook being fired. I'm going to cover all that. That is the number one market driver right now. We've got some other things planned. We're going to look at durable goods. We're going to take a look at the BoJ CPI, and we're going to look at some the CAD yen. We got to look at that one. But this right here, Euro USD, is absolutely fascinating. So for more of an in-depth look here, you can see the Euro USD. This is sort of what we put out in our newsletter, in our Switch Markets newsletter. You can see this is just a fantastic resistance zone. This 45-degree line, vintage trend line, daily bullish trend line, okay, that suggests that you have a bunch of higher lows. Oh, man, I always get that mixed up. Doing this 15 years, I can still get that mixed up. But in any case, you got a series of higher daily lows. And what that means is we connect the dots. And what do we have? We have a 45-degree line that runs into perpetuity. Now, remember, our trend lines don't just stop. They don't just stop when they're broken. They are designed to run into perpetuity. You run your trend line like this because what once was support is now resistance, and that was absolutely the case Friday. So there was sellers up here that said, hey, you know what? We're going to back up. We're going to hit this trend line, and we're going to short it. Well, that's exactly what happened right up there. Your high was about 117.50, 117.42. Sellers stepped in, crushed it. Absolutely crushed it Monday, and now we're tight. We're very, very tight. We're right there at that daily 13-day EMA, which is right around 116.49, 116.50. That's big. That's a big area. So right now we're trying to move higher, maybe with that initial thought that, yeah, we are going to cut a bunch of interest rates. The dollar is going to plummet, but we don't know yet. And that's why the market is very, very tight compared to where we've been over the last 48 hours. So a lot of folks are trading the Euro USD right now. A lot of folks are probably liking this short idea. I like it too. I think that if you could hold your water here, you're probably going to get a pretty good shot at a bearish break. Why? If rate cuts are coming, why? Because the market had an incredible reaction right here. It corrected itself. It looks to me like we could potentially make a run at maybe that 115.50 area. I think it's very, very possible. I think it's possible. If for no other reason, then there's just going to be a lot of participation in this market. So don't give up just yet if you're trading the Euro USD. Let's wait. Let's wait for this thing to open up a bit. I think that we're going to be in for some action as the week goes on, and God only knows what kind of headlines we're going to get between now and Friday's close. So we definitely want to be aware of what's happening in the Euro USD. We had another pair on the board that a lot of folks are trading right now, and I want to get right at the price action, and then we'll dive into our fundamentals. The Kiwi. Daily Kiwi chart. Really beautiful price action here, nice big break, a little bit of a doji, and then a retracement. So remember, if you get all these indicators on your MT5 platform, what you've got to do is you've got to right click, you've got to go to your object list and just start deleting objects. Just click delete, click delete, click delete. I know it's hard, guys. Trading View is a lot faster, but this is how you would do it. That's how you would get rid of your indicators for maybe a past session, which is what I had up. In any case, right here, you can see really a nice, really beautiful price action here. Nice spike high here, nice spike low that really came back, was that on Friday. So you sort of have compression right here. Still a little bit bearish, but what I'm interested in is a longer-term number. I want to see, okay, what's going on here? Well, coming off of this spike high up there in the middle of July, we've just sort of traded down for about the last 6 weeks. Definitely in sort of a bearish trend on the weekly time frame, but is there a support level that we can hang our hat on? And if you remember this chart, we pulled this up a while back, monthly chart. I love my macro support and resistance levels. I'm going Fibonacci retracement tool right there, 38%, a big time zone. We're beneath 38%. You'll notice we went right to 50% before we bounced back up. I'm cautious. I'm waiting for that 62%, somewhere right down around 57.28ish, maybe 57.35, somewhere in that zone. I think that could be a fantastic long here. For right this minute, I would be on the sidelines for the Kiwi, but that doesn't mean that you have to be. Which way do you think's right or wrong here? Man, I'm partial. Once you break beneath that 38%, that was a beautiful support zone for us. Go back and check out our analytics thread. We've tackled the Kiwi on several occasions over the past month. This right here, though, big time zone, your big time zone and your level that we're watching for two-way action is going to be right up there, right around 58.75. I'm waiting. I want to see maybe a 57.35, something like that. We're waiting a little while. I think that's pretty much the play. Do we get that sell-off today, tomorrow, the next day? Guys, this is the last trading week of August. Get ready for anything. Get ready for anything in the first trading week of September. Big time trading week after Labor Day. That's for sure. Let me see, getting right behind. It seems like I'm always behind on something here. Be sure if you want to check any of these trade ideas out or trade them, head out over the Switch Markets. This is a community, guys. How to trade, the education from how to trade, the functionality of the Switch Markets brokerage. We're working on that synergy, and we're attempting to get a crew of traders together that can really hold their own. We got some big things coming your way. I'm going to get a chance to meet a lot of you, I have a feeling, and that's going to be fantastic. I look forward to actually meeting, doing some one-on-ones, and I think that's going to be in the cards. Don't nail me down on the exact scheduling just yet, but probably late next month. I know we're going to have some slots open for one-on-ones, and actually get to spend some time and meet some of you that tune into our live streams quite often. So I think it's going to be good. Let me see. Tanner Owing, the Forex market is just so dull. Yes, it can be. Dull's good, though. Dull's good. Dull. Hey, listen, that's that old saying from James Vanderbilt, that God give me a boring business. Well, yeah, I mean, sometimes the Forex is incredibly boring. It wasn't boring Friday, and it wasn't boring yesterday. So personally, I don't mind it when these things settle into ranges and trade sideways. We've got plans for that. That's relatively easy to trade. It's just when the market's chaotic. And Friday, huge rally on JPAL. Monday, huge correction. Lot going on right now, even if it seems like it doesn't work. But yeah, Tanner, the Forex market is just so dull. I'm partial to futures, to be real honest with you. I like futures markets. Let me see. Tanner Owen, can you please explain more about economic data? Absolutely. We're going to talk data here in just a second. Tina Xing, how you doing, Tina? Welcome. Good to see you. Hope your workouts were good. I hope everybody had a good evening, a little bit of downtime over the weekend. Getting back into the swing. Tuesday is typically when I like to pick up my game and start trading. I think it's going to be a fantastic trading week, but there's some real fireworks out there, so we're going to get to it right now. Yes, sir. Good to see you. Hey, what did I miss? Not much. We're going to go over a trade idea now that hit big, and we also looked at a few of our pairs of Euro USD and that Kiwi. Let's see, Dave F19. Good to see you, Dave. Hi, Shane. I'm looking for a basic trading journal, please. Like you, simple and easy. We've actually got one coming out in development. I don't know when that's coming out, though. It's in development, though, as we speak. I believe there was a trading journal on our... Send me a private message, Dave. I know we have one. I know we have one built. It's on the How to Trade Calm YouTube channel. I did a video on trading journals, and in that video in the description, there is a free download. So head on over there and check that video out. That might maybe just what you're looking for. But if you want to trade any of these ideas or analysis, go head on over to Switch Markets. They'll get you up and rolling, thousands of markets, zero commission accounts, tight spreads. You guys know the drill. All right, trade update. This was a banger. For me, a banger is something that's just fantastic. This U.S. oil trade really speaks to what Fibonacci levels can do for you, what a live market can do for you, and what seasonal trends can do for you. It's that simple. We had sort of a sell idea. We wanted to sell 64.84s right up in that zone. We wanted to sell right in front of 65s. This is about as easy as it gets. Right there, opened it on a Monday. The high, 65.10. Fantastic. What's the low? What are we printing now? 63.34. That was an easy cash for how many pips you really wanted to take. I believe we were shooting for about 85. Let's go down to a 30-minute chart, and you can see exactly what happened here. Beautiful rally. Absolutely beautiful rally there. Yesterday morning, bang, bang. We were on air right here, and I told you, I said, listen, I like this one. This is a big-time zone. This is a big-time level, a big-time zone. Odds are we trade down from here. There's a couple of reasons why I said that. Number one, seasonality. Right now, seasonality sort of trumps all except Trump. I mean, clearly Trump can do what he wants with these markets. He's influencing them every single day. But seasonality, when it comes to fall seasonality for WTI crude, you got to be ready. You've got to be ready because this typically means bearish price action. Now, the rate cuts and a dovish Fed policy will hold crude oil prices higher. But as we get into the fall and winter months, you're probably going to see this come off big. And if you see a piece in the Russia-Ukraine situation, this market will crash. It really will. We'll be down at 55 in the blink of an eye. Now, we're not there now. 63.36. Really, though, a big-time sell-off of about $1.70. What are we off about? $1.39, about 2% today. Absolutely beautiful level. So if you guys got in on that, absolutely fantastic. Absolutely fantastic. So that's exactly what we want to do. Let me see. Top Gamer, hello, please. Where's the old teacher? Well, I've been here for about 4 years, Top Gamer. So if you're wanting the mentors that were here before me, the crew that was here before me, you got to go back a ways. But they're all over YouTube. I'm sure you could find them. That's for sure. But good question, Top. We've gone through a lot of coaches here. Not necessarily gone through, but we've definitely had some turnover here in the last few years. It's been good for me because I've had the opportunity to work with a lot of different coaches, a lot of different mentors. And anytime you have a chance to work with a bunch of different traders, typically that's going to work well for your knowledge base. And I've learned something from every single one of them. So definitely been a long road here, but I hear you, Top. I guess you're just going to have to go to YouTube and type in your favorites, and I'm sure it'll spit them back out at you. Nothing wrong with that. And believe me, there is a million folks that are out there that are trying to teach trading, that are trading live, that are trying to convince you to do something. You guys know what I'm talking about. I love the fake Lamborghinis. I love the rented Lamborghinis and the jets. The rented private jet's my favorite though. The cars, that's as easy as going to a used car or a car dealership and just saying, "Hey, can we shoot in front of your car?" I mean, that's easy. Anybody can do that. You've never seen me in a video doing that. I was in a video with my truck once. That was about it. But the ones with the private jets where they lease like in 2 hours with the private jet and they go out on the tarmac and they crawl in, they act like they're getting in and act like they're getting out. And if you look at the background, it's exactly the same. I'm not going to name names because they look like they're litigious and they'll probably sue me. But I get a chuckle out of that. I mean, I really get a chuckle out of those. I go, wait a minute. You got on the plane, then you got off the plane, and you're in the same place. Love it. Makes me laugh. Don't give them your money, though, on the real. Be sure of who you're working with before you start trusting folks online. I've heard some horror stories about advisors that have taken clients for, upwards of 6 figures. You're not going to get that out of me. You're not going to get that out of any of these channels, believe me. We have service suites that we offer, partner brokerage switch. If you need a place to trade, not a bad place. You should check it out. As far as how to trade goes, that's complimentary. You just tune in and check out all of our materials. Our YouTube videos are all free, and you can also ask me any question you want. That's free too. So that's just where we're at. That's the world we live in, guys. And quick story, then we'll get on with this. We'll get on with the technical analysis. When I was first starting out as a speculator, I was in my early 20s. I just got out of college, and I loved gambling on football, college football. And this was right before my real estate speculator days and about 8 or 9 years before I got into the markets. Well, you find out that there's a market for telling people what they want to hear, and there's a market for having the hot idea that no one else has. And I was like a lot of you. I was 22, so we're talking, 24 years ago already. So I was about 22. And I remember, I'd been on a losing streak. I'd lost like 3 or 4 games in a row, and I was always getting these advertisements, $50, and we'll give you a 3-pack of picks, guaranteed winners or you don't pay, all that stuff. And so they would call me on the phone, Saturday morning before the college football games. God called me on the phone and said, "Hey, we got 3 hot picks for you, $50. And I remember doing it one time. I said, "Okay, I'm going to do it. Fine. I want the winners." 0 for 3. Learned my lesson. I paid $50 for picks, and they went 0 for 3. Go with your own ideas. Go with your own strategy and your own analysis. If you have any questions, you reach out to me and I'll answer and I'll try to help you. That's what you have to do. Don't listen to touts. Don't listen to the men or the women that have the $1 million strategy. If you're going to buy a strategy, listen, there's strategies out there that work and there's people that know what they're talking about. But just take a look at their track record a little bit and talk to them. See if they're on the level. Now, if they're on the level, great. Then you guys are in business and you're partners. And as long as you're making money, fantastic. But I learned my lesson very, very soon, very, very early in life, 0 for 3. And I lost $50. So I lost all 3 of my bets and the $50 it cost me to get 3 losers. Lesson learned. All right, week 35, this is what we're looking at for today. BoJ CPI, durable goods orders. Those are the 2 big events. Really the biggest event, it was the firing of Lisa Cook. I'm going to dig into that here in just a second. But here's the news of the day. Core durable goods, this one goes out to you, Tanner. Here's all of our economic data. Durable goods orders. Essentially what these are items that you need to finance. So we're talking about washing machines. We're talking about refrigerators. We're talking about maybe snow blowers, depending on where you live. I tell you what, lawnmowers, riding lawnmowers, those things cost a fortune anymore. But anything that you really have to finance, or if you're not going to finance it, you're thinking of maybe paying it off over 2 or 3 or 4 or 5 or 6 months, something like that. So think bigger purchases than, say, a toaster, but say smaller than maybe smaller than a vehicle. They might include vehicles, but that's not really the bulk of what we're thinking of when we do durable goods. Definitely. Okay, durable goods order, core. And core is just the more volatile category stripped out. I'm not worried about core. I want the baseline, the headline. Durable goods orders came in at negative 2.8%. That's down from negative 3.8% expected. Okay, so down, I mean up. It's not quite as negative, so it still sucks, but it's a little bit better than we thought. And then negative 9.3% was the previous release. So what do you have there? You've got a number that's a big-time improvement over the previous month, and it's a little bit better than expected. Theoretically, that's a positive number. You see that little P by the numbers? It means it's still preliminary. They're still trying to figure out what exactly these mean. CB consumer confidence, this was one that I did want to look at today. Came in better than expected, 97.4, better than 96.4 and 98.7. If you read our weekly newsletter from Switch Markets, you'll remember in there I talk about confidence being really the precursor for a recession. When consumer confidence lags, people do not spend money. And when they don't spend money, you get that economic contraction. That's where a recession comes from. Remember, guys, it's all hooked together, and it all starts with our mindset and our confidence. If we don't believe that we're going to have a bunch of these coming in, if we think that we're not going to have a bunch of money coming in, then we don't spend it. We put it in a pile or stick it in our mattress and save it for a rainy day. That is destructive. That's destructive to growth. That's destructive to output, because why? Everything has to be scaled back to service the less demand. It's a demand side issue, and it all starts with consumer confidence. So chart book consumer confidence today for August, 97.4, but a little bit better than expected at 96.4, down from the previous month. That's what I call a throwaway number. Crumple it up and throw it away. It's a sandwich. It's a little bit worse than before, but a little bit better than expected. It doesn't really mean anything. It's basically in line with expectations. So I would throw that one out. I don't think that's a big deal. BoJ core CPI. We're going to talk about the yen here in just a second, the dollar yen. But the CPI came in at 2.0%, down from 2.4 and down from 2.3 previous. Now, these are year-over-year figures, but remember, the central banks of this world typically all focus on inflation being anchored somewhere around 2%. Japan's there, at least according to their figures. Japan's there. So if Japan is down at 2%, what do we think can happen to the yen's interest rates? Remember, Bank of Japan loves to have negative interest rates. It's called the dirty float. It makes those exports hyper-competitive. They want to get back to that negative interest rate as fast as they can. And right here, I believe we're still in positive interest rate territory in Tokyo. So be looking for maybe, a rate cut? You going to get a rate cut out of the BOJ? I don't know. Fantastic job with inflation, though. Their figures are on the ball, 2%. Now, do we believe that all these figures are correct? Maybe, maybe not. But it's still a step in the positive direction for Japanese inflation, and that is something we haven't seen in the Western world. Let's be honest. U.S. inflation is out of control, and they're going to start cutting interest rates. I'm going to talk about that here in just a second. Back to durable goods, though. That sort of was our pick to click, or our focus of the day today. This is right from the horse's mouth, the U.S. Census Bureau. Orders of durable goods in the U.S. fell by 2.8% from the previous month to $302.8 billion in July, extending the revised 9.4 slump from June, but slightly softer than the market expectations. The data reflected an extended period of softer orders from firms, front-loaded imports in May, yada, 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 tariffs. That's basically what's being blamed for the durable goods consumption, and it certainly could be. So we just got to wait and see if this trend continues, but sooner or later, you're going to have an uptick in durable goods. One thing that I would like to point out is you were basically static last year. August, September, October, November, December. There just really wasn't much going on with consumption. Then you saw really the big move there in March. That was to get ahead of the tariffs that came on in April. Then you saw another big move in May, and that was pretty much to beat the August tariffs, the August 1 tariffs. That's all there is to it. So from a macro standpoint, is the durable goods a drag on the markets, or is it good for the markets? Right now, I would say it's neither. People don't know what to do. The traders do not know what to do with that data. In my view, and I agree with a lot of economists, I don't know that you have a baseline for any of the economic data that we have now. In my opinion, it's all sort of skewed by the tariffs in an unprecedented situation. Now, I'm not saying that it's good or bad. Tariffs are good or bad. I don't know. Only time will tell. Only time is going to give us the answer to that. But at least from an empirical standpoint, excuse me, I can't speak today. From an empirical standpoint, a numbers, a statistics basis, we can make the argument that the feeling of the tariffs is beginning to be shown. We've seen that in durable goods. We saw it last week in PPI, where those wholesale prices ticked way up. That was something that scared a lot of folks, scared them in the government, because they say, listen, if we can't control the narrative from the producer side, the wholesaler side, it's a matter of time before CPI, the price to the consumer, starts jetting very, very high. Now, how the hell interest rate cuts fit into all this, I have no idea. We're going to talk about that in a minute, though, because rates are coming down, and there's no two ways about it. One way or another, they're coming down. I heard an argument earlier today. I'll unpack here in a second, but I do want to cover this dollar-yen first. You got the dollar-yen right here, monthly chart. Really nice compression and a nice break right there. Really a big time move in July of about almost 5%, 4.68%, and then a retracement in August. That shouldn't surprise anybody. Typically, when you get a big directional move, it is not uncommon to sort of trade back down and debate some of these price points with vigor. So what we have here is we've got a flat market. It's been tough. I know there's some yen traders in there. I believe yesterday's a yen trader. Very difficult to understand, why isn't the yen putting on the show that it usually puts on? I mean, I remember back here when we were doing these live streams a few years ago, this was easy. 2022, bet on the dollar, bet against the yen. It was easy, big pullback here, and then you made another leg up. But since then, we have really chopped sideways. So it's very important to sort of understand that, we're not nearly as bullish, the dollar over the yen, as we were. This market's sort of flattening out a bit. I could build a case really either way. If the BoJ starts slashing interest rates, you're probably going to want to play this to the top side, but we're not there yet. So nice big retracement back down into that range. Let's see if we can find a short-term trade, because I almost guarantee the weekly's futile. Yeah, the weekly doesn't look good. It doesn't. That's ugly. That's bowling shoe ugly right there. The low EMA, my 13-week EMA is right around 146.89. So maybe 147 is a pretty good zone. If you were long from 147, you're probably doing well. We could say that you have a slightly bullish bias here, but I just don't think so. It's very, very tight, guys. This is just a killing field to trade. 1, 2, 3, 4, 5, 6 weeks. I mean, right there, you've got a doji, you got an inverted hammer. That's almost another doji. Very, very tight trade. This is miserable. Let's see if we can find a scalp. Let's go with a nice 4-hour scalp. Do we have anything that we could trade here? No. A basic rotational trading strategy, a reversion to the mean strategy, which basically means you're going to buy a lower extreme of a range or you're going to sell an upper extreme, and you're going to try to profit back towards the center of that. We've got a few things we can do. We can definitely use the pendulum strategy. I'm not going to unpack that right now because it's sort of I'd have to go through all the rules and stuff, and it would take us a little bit of time. Maybe we'll do that in a workshop soon. But this right here, this is sort of a game plan that I've used over the years, and it's been fairly successful. And the reason what makes it successful is understanding what a key event is and what moved the markets and what my key levels are. And right here, if you take a look at that 4-hour price bar, that's when Jay Powell decided he was going to come out at the Jackson Hole Symposium and start talking rate cuts. And that's what sunk the dollar. And then we've sort of crept back up into the middle of this range. But now we've just got this range. We've traded inside of that 4-hour range last Friday, and we've done it for several sessions now. A lot of folks would say, yeah, Shane, that means a breakout's pending. And I'd say, not without a catalyst. We're going to need a catalyst. If the dollar starts moving, then I would say, yeah, play a break. But right here, maybe something like this, you're probably going to look to bid the bottom of this range, treat it as downside support, maybe take a shot on that reversion back up to 147.50, something like that. Maybe risk a 1-to-1 type of a trade, or you may be able to go 1-to-2. If you're going to buy maybe a 150 at 146.57, maybe your stop loss is down there, at 29 maybe 22. Try to get in there and grab 30 pips to the top side on a market that really doesn't have any reason to move, at least not yet. And so one of the toughest things to learn in all of trading, guys, is markets don't have to move. They don't have to move. And when they don't move and we think they are going to move, we typically get in a little bit of trouble. So this is sort of a challenging market to trade. I would be very, very careful trading the dollar yen. We're going to talk gold here in just a second, but this is a challenging pair right there, Japanese yen. Let me see. Bill R. Do you think the NVIDIA earning affects the DXY? Wow, great question. I mean, it's the chicken or the egg. Theoretically, you would look at maybe a blue chipper like NVIDIA and say, yeah, when NVIDIA is showing that it's hurting, we could start to build that recessionary narrative. And that's what they do on CNBC and Bloomberg all day long. I'm not going to BS you like they BS you. Does NVIDIA earnings impact the DXY? Theoretically, if you said, okay, well, when NVIDIA contracts and they're not showing big earnings, that means we're going into a recession, which is going to impact the DXY because the dollar is going to be weaker because of rate cuts. That's the thought process there. But is it true? I would have to dig in and do some serious research projects over blue chip stocks, specifically in the tech sector. We could take a look at their earnings over the past 5 years and see what they've done, if they've actually been leading indicators for a recession, because you're going to hear it. You're going to hear it in the media. NVIDIA's earnings come out, they fall flat, they go, oh, the U.S. is going to a recession. This is miserable. Dovish dollar. I don't know that it works that way. And the other thing would be, well, maybe, just maybe those earnings are down because the dollar's struggling. Maybe the dollar's too strong. That's why earnings are down. So I genuinely, Bill, I couldn't tell you. I'm going to leave that up to the talking heads over on cable news, the cable news networks. You're going to have to ask them, Bill. Good question, though. It's fascinating. I mean, we could design a study to figure it out, but we'll probably save that for another time. That's a lot of work. That's a lot of work. Tina, there's so many scams out there. A lot of scammers, Tina. A lot of scammers. And there's also a lot of good people out there that are just trying to help. And there's advisors out there that you can hire that will put you into good trades and good positions. You just got to sort of make sure someone's track record, but more importantly, if they're reputable, talk to other people that have done business with them. Don't just get fooled by maybe some testimonials or something on their website. Actually try to get out there, engage people, and maybe a Discord. That's a great place to do it. Also, you could go to, big time chat rooms, trading chat rooms. You can start kicking around and asking ideas. Maybe on X, you could ask some people on X that are traders. It's hard now because what the computer's done and what this work at home environment's done is it's isolated us. I mean, there would be a time when we would all be in a prop shop, or we'd be trading downtown in a building, and there would be a couple hundred of us in there, and all we would have to do is start talking to your peers, and you'd say, hey, what do you think about XYZ service? Or what do you think about that charting platform? Or what do you think about that broker? And you can actually exchange information. Now, it's really difficult. It's really difficult. You got to find somebody reputable, and you have to ask them, and you have to develop almost a relationship with them. And right now, in the remote marketplace, very difficult. Absolutely very, very difficult. Let me see. Yes, sir. My poor yen ain't doing nothing for me. Yeah, it's tough. Really tough since last Friday. Andy Tong. Hi, Shane. Andy from the UK. Good to see you, Andy. Welcome. Absolutely welcome. If you have any questions, be sure to ask. Let me see. Tina, I have a U.S. dollar, Canadian dollar at break even now, but starts to come back up. I wonder if it could hit my 138.14 like a previous resistance price. Go ahead and look at the dollar CAD. Okay, so 138.30, this is the daily chart. So you had a 13-day EMA down there at 138.23. What's the low today? 138.22. So that's stiff support. I just can't talk today. Stiff support level right there. Doesn't mean it's going to hold, though. If you're bearish today, you definitely won. If you're short from up here somewhere, I think that this area right down in here could be definitely stiff support. 138.12. That's 78% retracement right there. That Friday's low, and then we bounced. I believe we called that on the live stream. Nice little bounce there, and now we're starting to fill in. It looks to me like this market's loading up. What's really challenging the Canadian dollar right now is WTI crude oil off 2%. If you didn't have that big bearish move, potentially in crude oil, you probably would have trended right down and hit your profit target. But because the crude oil market really has been miserable today, let's go ahead and take a look. About 10:30 a.m. Eastern, 8:30 a.m. my time, you had a big time sell-off right there, about 0.5%, about a full percent in about an hour. Is this a trend day down? Yeah, I mean, it definitely is. If you did it during the overnight, it was a trend day down. But this rally right in here, my guess, Tina, is that's what gave your Canadian dollar trade a little bit of puff. It started looking real good, a few hours back, and then crude oil continued the descent. So if you do see crude maybe moving back up, it is going to give your U.S. dollar Canadian yen trade a better probability of cashing in. If you were looking at, say, what was our target, 138.14, something like that. I don't hate the target. I think it's a pretty good target. It's just we have that moving average right there. I mean, right there. That's the daily moving average. So right in here, I mean, do you see how that Canadian dollar just sort of mirrors that crude oil? This sell-off right here developed pretty much when that crude oil was rallying. And since then, now that we're starting to lose a little bit of puff here in the Canadian dollar, that's because that crude oil is going lower. You can see the correlation, relatively straightforward there. But so, yeah, I mean, you still have a chance, but you need crude oil to probably start going up. Correlation. It's called a commodity dollar. It's a correlation, that's for sure. Let me see Sengoku. Good evening from Amsterdam. Good evening in Amsterdam. How's it going? I've never been to Amsterdam. That's quite a ways from here. I don't think I fly through there. Actually getting ready to hit the road here in a few weeks, but I'd have to actually look at my itinerary. One of the stops, one of the options went through Amsterdam. I don't remember which one I chose, to be honest with you. I got to pull up the itinerary. I'm sorry, I get trading and I get into these news cycles and I don't really look at much else. That's for sure. All right, everybody, it's time to get down to brass tacks here. We're going to talk gold. I'm going to close up with gold. I think that the breakout's on, really, this 4-hour chart right here, this 920 crossover. We're starting to get the trajectory that we're looking for. Remember, that bid would have been somewhere right around 74, so you're up about $10. This ought to be interesting, guys. Ought to be interesting. What's going to be the number one market driver here for gold? There's a lot of them. This was the biggest news story we've seen in a long time. This came across the market last night. I actually sent a few tweets out and wrote sort of a breaking news item here for the How to Trade Traders. It wasn't a trade idea. Just wanted everybody to know what was going on politically. And what we had here is Lisa Cook will sue Trump over firing from Fed board. Last night, Cook was fired. Was fired by the Trump administration. Donald Trump decided they were going to fire based on the credibility or the lack of credibility from some mortgage deals. Essentially, there was some allegations of mortgage fraud, and there was essentially, here's what happened. Mortgage fraud's an interesting thing. It's going to be really hard to prove this in a court of law because you have to prove intent. You have to prove that there was malicious intent there and somebody didn't just make a mistake. However, being an FOMC member, being someone that should understand how money works better than the rest of us, didn't get the job done. So if we go over to X here and say, let's go ahead and take a look at the actual tweet and read it. Well, I can't read it. It's too small. But in any case, what we had was allegations that 2 mortgages were signed within 2 weeks where Cook claimed to be the primary residence on each. Okay, that's mortgage fraud. And the reason why it's fraud is because you're going to get better lending rates. If it's your primary residence, you're also going to get tax advantages, and you're also going to get lower insurance rates. Okay, so you're going to get a lower interest rate to buy your home. You're going to get some tax advantages potentially when you sell said home. Remember, you live in your primary residence here in the United States for 2 years. You turn around and sell that. You're free of capital gains, I believe, up to about $750,000 or $800,000. That's a big deal, especially if you're thinking of buying these things as investments and flipping them. All right. The other thing's insurance. You're always going to get a better insurance rate on your primary residence than you will get on a secondary, a vacation home, or maybe a rental property. Okay, so what happened here? What did Cook do? Well, apparently there was a criminal referral put out by the FHA director, Federal Housing Finance Agency Director Bill Pulte, that alleges that she made false statements on applications for home mortgages. All right, so apparently what had happened was Cook bought a house, I believe, up in Michigan, signed XYZ, this is my primary residence, and 2 weeks later went to Atlanta and bought a condo in Atlanta and said, this is my primary residence, and filled in the paperwork and then got the loans and secured both properties. That's mortgage fraud. And I have no doubt in my mind that Pulte, the director of the Federal Housing Administration or whatever, they have they have that paperwork. They have the signatures. They know it. But it doesn't mean that you can prove that it's malicious. So getting a conviction here on mortgage fraud against an FOMC member is going to be a real long shot. Now, Trump did move in and fire Cook for cause, which the president does have the authority to do, and that goes back to the Federal Reserve Banking Act of 1913. You do have that kind of authority when you're the president of the United States. You can fire for cause. And realistically, the firing probably will be upheld because there are questions about ethics and competence if you did mess up that mortgage deal. So on one hand, you could say, well, Shane, it wasn't malicious. She made a mistake, or maybe wasn't even there when it was signed. Who knows? And I would say, yeah, okay, I might be able to buy that. All right. But you're still an FOMC Fed member, so you should have probably known what you were doing in the lending end of it. So that screams incompetence, and that would be a way that you could fire somebody for cause. I think the firing is going to stand up in court, but they are going to court. They will go to the Supreme Court, almost guarantee it. Now, will there be any criminal indictments or proceedings? No, I doubt it. Not going to happen, probably not. But here's the thing. Okay, Lisa Cook was a Democrat, was a Biden appointee, has backed Powell pretty much on all the votes. I believe in every single vote since she's been there, and that typically has been to cut rates last year before the election and hold the rates higher through this year. Now, I'm not saying that it's 100% political, but this right here is political. No question about it. So with all this heat on the FOMC, that's one FOMC voting member down. Here's a story that sort of slipped by me, slipped by a lot of us. Adriana D. Kugler submits resignation as a member of the Federal Reserve Board effective August 8th. Okay, this resignation happened earlier this month. Kugler, who has served as a government's governor, an FOMC governor since September 13th, 2023, submitted her letter of resignation to Trump and will return to Georgetown University as a professor this fall. It has been the honor of a lifetime to serve on the Board of Governors federal system. Okay, here's another governor that has sort of been backing Powell's play, Republican or Democrat. Those are two Democrats that have been removed from the FOMC. You say, Shane, why are you turning this political? Because the president has the power to appoint those positions. Those were two Biden appointees. Trump's going to come in, and he's going to appoint two more people. They're going to be people that want to cut interest rates. No question about it. They're going to be doves. They're going to go to the Abenomics School of Economics. And the idea is going to be cut interest rates, grow the economy, try to keep us away from a recession and or an economic downturn. As sure as I'm sitting here, that's what's happening. Now, why did Kugler resign? I find it curious. A resignation comes in a few weeks before these mortgage fraud allegations were launched against Cook. My guess is this: they were all being investigated. And Kugler maybe just didn't like it. Maybe didn't like the environment anymore and said, you know what, I'm going to go back and be a professor at Georgetown and call this good. Or, there may have been ultimatums made. We don't know. But what we do know is this: the FOMC members, you have two from the Democratic side of the table that are now gone. Trump's going to appoint two more. I can almost guarantee you they're going to be Republicans and they're going to be doves. That should really play into our interest rate expectations, not necessarily for the coming meeting. We already know this. We already know what's going to happen in September. We really do. 22 days. I believe I'll be here for that. Maybe not. Might be out for that. But in any case, you can see right here, 87.3 chance that you're going to get at least one rate cut, 25 basis point cut in September. Now, that's not really my question. My question is this: where are we at by the end of the year? And how has this impacted things? It's impacted them a lot already. Right now, what do we have? About an 84% chance that we're looking at least a half a point rate cut, more than, or in even a full point's possible, 3/4 of a point's possible. Politics is playing huge in that boardroom. Pressure's been on Jay Powell all year long. One thing the Trump administration did, instead of firing Jay Powell, which they can't really do, can't fire the Fed chair, they've made moves against the actual FOMC. Two are out. Lisa Cook's going to try not to resign. It's over. You're fired. The power's there. That'll go to the Supreme Court relatively quickly. If I had to bet, the Supreme Court's going to uphold that firing just the way that it is. There's questions. There's ethical questions there. Now, she may be able to turn around and sue for wrongful termination and might win that. That's possible. But we don't really care about that. What we care about is who's going to be voting in the next couple of FOMC meetings. That's what we care about, because that is what's going to really impact your dollar index. That's what's really going to impact your gold market. That's what's really going to impact everything. Look at this. No coincidence that our markets are flat today. And they're flat today because nobody knows what to do. Two FOMC members are down. Who's going to be voting the rest of the year? And more importantly, who's going to be voting next year? Powell's term is up next May. I would bet dollars to donuts that he resigns before next May. I think December's Jay Powell's last meeting. He's going to resign before the end of the year. There is a lot of heat on everybody in that room, and a lot of these folks don't want any part of it. So, prognosis for 2026. Wouldn't shock me if they cut interest rates down to 2%. 1 3/4. Would not shock me at all. The table's being set for that kind of move. Is it right? Is it wrong? Hard to say. Hard to say, guys. Let me see. I got way behind there. Let me see. Yeah, Hurst Horns, she's refusing to step down. Yeah. Well, we'll see what happens there, but more than likely that's the end of the road there for Cook. Tina, oil and CAD go opposite. Yeah, it's an inverse. Well, I mean, it's an inverse correlation. So the Canadian dollar, the U.S. dollar, Canadian dollar, that pair would have an inverse correlation with the price of crude oil, but the Canadian dollar itself would be positively correlated. So when crude oil goes up, the Canadian dollar is typically going to show strength. So in that US dollar Canadian dollar pair, that means that you're going to see bearish price action. I know it's confusing, guys. Forex is confusing. That's for sure. Hello, Small Yeezy. Hello, how you doing? Let me see. Sengoku, was there a Canadian interest rate cut in the works? I can't remember when it was due. I believe it was last week, Sengoku. I think they cut by a quarter. The inflation numbers weren't good, though, and they ended up dropping some tariffs. I believe they dropped some tariffs last week as well. So board turnover looks legit. Yeah, Hurst, that board's going to be completely different. It's going to be very, very dovish. Very dovish. They're going to cut interest rates down enough, and your markets are going to go up. But the inflation, I don't know how they're anticipating controlling inflation. No idea. Let me see. Kirkton, Kugler's term on the Fed ends in 2026. Yeah, that's sort of my point, Kirk. When you bail out, who runs with that? I mean, you're only talking about a few months. Who resigns with only a few months left in your term? Wouldn't you play out the rest of your term and vote in September? And where was the other meeting at? You're talking about missing 3 votes. You're talking about missing 3 votes here. September, October, December. Why wouldn't you just play out the rest of your term and then just hit the bricks before the January vote? You see, it makes no sense. And that's sort of why I'm saying what I'm saying. Something happened in that room, and the pressure was immense. So, well, your term was up in 2026 anyway. I go, yeah, but it wasn't up this year. That's 3 more votes. Who would do that? You'd finish your term out, and then you'd move on next year. The professorship at Georgetown's always going to be there. That's not going anywhere. So, I don't know. Let me see, Sengoku. So short the USD and long gold in the next month? Well, yeah, more than likely. We got to wait for the markets to digest what we just talked about. Initially, we saw sort of the dollar falter. We saw some pretty good action in gold. The bullish action is definitely there. As the dollar goes down, commodities go up. But as we stabilize today, now you've got a legal challenge. Now nobody really knows, can he force Cook out? Is Cook going to stay on maybe till the end of the year? How is all this going to work? Nobody knows how it's going to unfold. But my guess is they're going to get it in front of the Supreme Court relatively quickly because it is a functional thing here facing the economy. Does the Supreme Court uphold the termination? Now, we're not talking about civil stuff. Cook can definitely come back and sue and say, no, this was wrongful termination. You guys can't prove anything. You can't get me. And it's going to be hard to prove it. You can easily just say, oh, well, she made a mistake. That's what she's going to say, and her lawyer's going to say, because that was an oversight. That's what everybody in the government does. I recommend everybody watching this stream not to try mortgage fraud. Don't do it, because the rules for the big guys, the honchos, the folks that are in the government are a lot different than the rules for you. Believe, hey, listen, if I bought 2 or 3 houses and I wrote they were all my primary residence and that came up on somebody's register somewhere, Shane, we need a Mr. Explanation, and we need it right now. And believe me, going in there and playing dumb wouldn't work. She's going to basically play dumb and say, oh, that was an oversight. That was a mistake. It'll work, too. That defense will work. Doesn't work for everybody else. Let me see. I agree with you. We need to know, and being patient is the key to trade and economic data. Absolutely. All right, guys, let's talk gold and we'll call it good. As far as your monthly bullish pennant, what you have here is just compression. I covered this chart every single day. The key level I'm watching closely is 3,500. Once we take out 3,500, we're going high. This is the kind of catalyst. Remember yesterday I said we need a catalyst, something that's going to drive this market higher. This is it. A dovish FOMC that's going to promise rate cuts not just next month, but the month after and the month after, and then the first quarter of 2026, those rate cuts, if those are all get baked into the gold cake, gold goes to 4,000. That would be my guess. Well, when? Hard to say. Hard to say right now, but that's the kind of catalyst that could drive us definitively higher. It looks like we are getting ready to go into a dovish rate cycle. Hard to say how low they go. It depends on who's on that board. But in any case, right there, you start to see we're making a move. The key levels that I would be watching is the top side. Last month's high is going to be 32.68. The high right there, I read the wrong one, 34.38. So right around 34.50 is probably going to be your bullish launch point. I'd be watching that closely if price does break above last month's high. But as far as this 4 hour, we talked about this right there. That announcement was at that 4 p.m. bar. 4 p.m. bar from yesterday, that's when the announcement was made that Cook was getting fired. And you can see right there, you get the bullish action, then we flattened out, and now we're moving higher. I think that there's going to be an interesting dynamic here developing in gold. And if you were holding along on this 4-hour chart, if you had that 4-hour bid going, the 9 EMA crosses over the 20, there's our big gold signal. If you're long from 33.75, you could say probably a viable topside target, maybe up there right around 3,500, maybe right in front of it. It's possible. It's possible to get there. Now, as far as what would we be doing now, I have a long side bias, but the market is very, very tight, so I would be careful. I get a lot of questions about, Shane, you only pull the monthly on gold. Yeah, because the weekly is just ugly. I mean, there's really nothing here. If you wanted to look for a downside support level potentially to buy, you could look at our 13-week EMA, which is 33.29, something like that. That could give us an opportunity potentially to bid this market with a little bit of a discount, but I wouldn't hold my breath on it coming back. It may. It may. It definitely may, but if it does, we could definitely be net buyers down there, probably from 33.29-ish, and look to grab $5 or $6 on a nice rotational move. As far as our catalysts for gold this week, that's probably it. The political news will be it. Always remember geopolitical stuff. Russia, Ukraine does move gold pretty much religiously. And then an economic event. Thursday, we're going to be looking at GDP numbers. That may have an impact on gold. I don't believe so, though. I don't think you're going to see that big of a downward adjustment. And then also Friday's core PCE, the PCE numbers, the inflation numbers. That's really when the Fed is going to be under a microscope. So we've got to really watch what happens on Friday, core PCE, and we'll go ahead and bring you all the coverage of that as well. It won't be live, but we'll go ahead and recap it. A lot of times core PCE doesn't really move things like a CPI does or an NFP, but definitely here. So if we went down to a daily, you see we bounced right off that moving average on the daily, and that was right there at 33.52, and we're moving higher. So I think if you were going to do anything, this 4-hour chart on gold, a pretty good one. Nice bid. I know the bar's huge, but we are trading above where we were last Friday, and that's key. Remember that range, that Jackson Hole range is key. Let's go down to a 30-minute chart and see what's happened really intraday. Not much. We went right there, and then we've just sort of traded sideways, and now we're starting to break higher. So we're watching this stuff closely. I'm going to be staying on that 4-hour time frame here because gold is a true 24-hour type of a commodity, so we should be able to grind higher. I'd be looking for 3,400, something like that relatively soon. We just got to stay tuned and wait and see what folks decide they're going to trade. That's for sure. Let's see, Sengoku. I've been looking for a position on gold now for a while now for the long term, but being a 5-minute scalper, it's hard to find a good position that holds. No, it's just been absolutely a killing field in gold. Very tight, very rotational, tough to really pick a market. I mean, we're all sort of bullish because we know the long-term trend's bullish, but for the last 90 days, the market's been flat. Intraday traders have really taken their lumps trading gold on intraday time frames. So you sort of got to be careful. You got to be respectful of what's happening with regards to price action itself. Understand we're not really trending anymore, but this looks like an accumulation trade. Maybe we keep going up, and if we do get a swift reversal, at least our stops, right down in here somewhere. You could even put your stop beneath that candle if you want to play it really tight. It's up to you. Let's go right here. Great Britain Pound USD. Let's take a look at this one. You can see right here, you sort of got a bid. I would be very careful bidding this on the 4-hour right now. And the reason why is you've got sort of that weave formation. Once the market flattens out on these Forex pairs, it's really difficult to trade a crossover, a 920 crossover. But something like this, maybe if we can get price just to get out of whack and give us an opportunity to support a resistance level. Let's go to a weekly. Okay, this is doable here. You can see there's our long-term monthly levels. We hit that one out of the park last month, but that's over. That's over, that's for sure. As far as the Great Britain Pound USD goes, very, very tight. I think that, do we want to be long or do we want to be short? Hard to say. We've got a moving average right there, 134.31, something like that. Decent downside support in the weekly. But if you wanted to be short, you still have a little bit of room before you get there. You sort of bounced off that earlier today. The real question is where do we go from here? I mean, it's tough, guys. These are tight. These are tight markets. And I would be very careful trading really anything in the majors right now. It's just very tight. Something like this, though, nice rally, and then we're inside bar, and then we sort of broke to the downside. Do you want to buy it or do you want to sell it? Let's go down to a 4-hour. I probably would advise to look at this market like we looked at one of the other ones earlier, where we identified that JPOW range. There it is. Politics is moving these U.S. dollar markets, no question. Right now, the big move, settled back in, little bit of action on this firing, and now flat line. I'm firmly on the sidelines here. If you're holding shorts, great. If you're holding longs, great. I just be sure you manage your risk. The biggest thing I'd be watching is this Jackson Hole range. Probably going to stay in it for a while, but if we do break out, it's going to be either beneath or above. If I had to pick right now, I have no idea. that market's so tight and right in the center of that range. I mean, that's a tough one to pick, guys. I'm going to stay out of that. I'm going to stay completely out of that. All right, everybody, I'm going to go ahead and sign off here for a few hours. Tomorrow, we're going to be back with a Switch Markets Live webinar. Let me see, Switch Markets Live, Bollinger Bands trading strategies. I'm going to talk about 2 trading strategies. The first one that I'm going to talk about is going to be a reversion strategy, and that's going to be one where we build trades based on price staying within the Bollinger Bands. The second one is going to be, well, it's going to be a breakout trading strategy, and we're going to employ a couple different kinds of charts, and I'll sort of show you how many tests of a line it takes before maybe we play a breakout, and what sorts of fundamentals you need to be looking at as well. We can also maybe talk about retracement strategies, but that essentially is using Fibonacci retracements as intersection tools with a Bollinger Band, either the upper or lower. I don't necessarily know that we need to do that. That may get us into the tall grass. That's one of my favorites, so I love that one. So probably going to play a breakout and rotation, and I'm going to show you a YouTube video that one of the first ones I ever made back in the day. I'm going to show you that one. Maybe you can check that out and maybe glean something from it strategy-wise. Okay, everybody, I'm going to go ahead and sign off. Gordon Williams, so we're at 50%. Yep. I mean, that Great Britain pound USD is right in the middle of that range. What does that mean? It means that the buyers aren't winning and the sellers aren't winning. Other than that, it's a market to trade. I would be on the sidelines, but if you have good entry, if you have a good short entry or a good long entry, there's nothing wrong with being involved. You just got to be really careful because it's flat. Market's flat. Let me see, Babukar. When do you normally come live? About this time every day. This week we actually sent out that Switch Markets newsletter. I believe it's 5 GMT. So 11 o'clock my time, Mountain Time, 1 p.m. Eastern. That's typically when I go live, and we're taking a lot more questions now. These streams are running a little bit longer than they have in the past, just because we do have a lot to cover. But definitely, you guys have any questions at all, be sure to ask. Let me see. Small Easy, thanks for today on the economic data. Absolutely, Hurst, Tina, absolutely, you're welcome. 100% welcome, Bobby. Bob, you're welcome, Bobby. All right, everybody, keep one eye. If you're trading Forex, keep one eye on the news cycle. I'm curious of which is the next FOMC member to fall. I really am. Who's gonna bite the dust next? We're down 2 in the last 6 weeks. Is there another one? Is there somebody else on that doesn't want to be on that panel anymore? I don't know. Nobody knows. We'll find it out. All right, everybody, you guys have a fantastic trading session. If you need anything, reach out to me, a private message over at howtotrade.com. I'll be sure to get right back to you. Interesting week. Should be good. Absolutely. Cheers, Kirkton. All right, everybody, trade the action well, and we'll talk soon. See you.